Sure, I'd be happy to start. Oh, there. Someone in Madison, Wisconsin, another cold area. Yes, Lauren, I'd be happy to start. The topic for this pit crew is Accounting 101 for Founders. I'm going to tell you a little bit about myself, but first, let me tell you what I hope you're going to take away from this brief presentation. Startup founders are typically really smart and capable, and a lot of times they handle their own bookkeeping for quite a while at the beginning of their company, and that is fine. That's great. That's a good way for you to save money until you're big enough to hire an outsourced accounting group. And we'll talk about in the presentation kind of what to look for, when to get an outsourced group to help you. But until then, there are some best practices that owners can do that will give you less headaches down the road and will actually save you money as you transition to outsourced accounting. And so that's what I'm going to go over today, is some of those best practices to keep in mind as you're doing it on your own, or what you want to look for when you do transition to an outsourced accounting or bookkeeping group, what you want them to be able to do for you. Let me enter a thing to go up. Another title screen. I'll tell you about myself while we're on this one. Chastain Partners is what can be called a boutique accounting group or outsourced bookkeeping group here in Austin, Texas. Most of my team members, I have 5, are in the Austin area, and we were working remote before that was cool. We have a very tech-forward approach to doing bookkeeping, so everything is online. And there are still many bookkeepers, independent bookkeepers and bookkeeping groups and accounting groups that are doing things paper-based or file system-based. And you don't need to do that these days. Everything can be digital. And in fact, it makes it easier to store, easier to do, easier to take with you and to transition to someone else down the road. So a tech-forward digital bookkeeping process is very helpful for companies right now, particularly the tech companies that would be part of a Capital Factory event. So I'm sure you're all looking for that type of solution. And we'll talk about those best practices that I have developed along the way. I've been doing independent bookkeeping since 2014. I started just as a one person doing it for a few tech startups here in Austin, just kind of tagging along with someone who was doing fractional CFO work. And then in 2017, I had more work than I wanted to be doing. So I got to the place where either I had to turn away the new clients that were potential clients coming to me, or I needed to hire people to help me. And so that's when I created a vision for a company. And so I have part-time employees, and we've grown. We're at about 20, just under 25 companies right now. I tend to take on a new client, about one every month. And my focus, my niche, different bookkeeping groups and accounting groups have specific niches that they do really well. Not all of them do. There are some that are just will take any kind of client, especially the bigger groups. But small practices like mine tend to have a niche. And I have a few niches. One is tech startups. I really enjoy starting founders getting going with an eye for scale later. So there are some things you can put in place now that make it easier when you start doing recurring revenue, recurring invoicing, digital payment solutions. So things you can do that may not seem important at the time, but it just makes it easier down the road. So I like setting up tech companies right away, doing things well. And then I have a niche that is independent professionals, like interior designers, or real estate professionals, or IT consultants. So we take really great care of that niche, independent professionals. And then the third niche is interesting. It's the Airbnb or vacation rental niche. And that has really taken off in 2020, which is interesting. But we know how to handle that Airbnb and the connection with that, or your reservation system, and how that shows up in your Xero accounting system. So that's enough about me. Let's go on and talk about best practices for accounting for early stage founders. Okay, number one is separate your personal and your business funding as soon as possible. As soon as you have an EIN for your company, you need a bank account for that. So you'll have that EIN and you'll be able to take it to one of the banks. A question I get a lot is, which bank do I work with? There's a lot of good banks, lots of them that are local, lots of them that are around the country. I do have some favorites that if you're interested, you can reach out to me personally for. But one thing to avoid is those small credit unions. A lot of times the credit union bank accounts will not sync with your accounting software, and that makes things a hassle. So look for a bank that will sync with accounting software. And that tends to be the bigger, well-known banks that you see, and not credit unions. Also, some credit unions have issues with downloading statements or having statements time out. So just avoid those. Your business email group. I recommend starting out with accounting at your company domain. So for example, accounting at chastainpartners.com. And as soon as you're setting up your company, don't have accounting related emails come to you personally. And this will help you as you grow and have team members and your company gets bigger. You don't want stuff coming to your personal email that's accounting related. You want to be able to delegate that as smoothly as possible down the road. And so an easy way to do it is to just create a Gmail or an MS Microsoft email, accounting at your domain.com. And then when you grow, you can forward that into the accounting team's portal, or however it is that you share that email with others. And for now, if it's just you, you could have it forward into your email, but I do strongly suggest you create that email group. And you'll give that email out to all vendors, and you'll use it when you set up things like Bill.com. As you grow, you probably will have some customer that may want to pay you through Bill.com. That's a pretty broadly used program right now. And so don't use your personal email to set that up, use the accounting email. And so any other accounting related connections that you're doing for your business as you grow, like if you set up Stripe or PayPal, I suggest you use this accounting email for those. Digital document storage, you want everything to be scanned in and digital. I use in my practice the Google Drive system. Some clients use Dropbox. I found for my company and then also for my clients, Dropbox gets a little more expensive more quickly, at least at the current time, than Google Drive does. So you can start with Google Drive. If you wanted to move to Dropbox later, of course you could. And then I have the accounting buckets. So I have an accounting folder and a folder that is like corporate documents, and then a folder for bank statements, which are the high level folders that I create. And then within accounting, there'll be things like tax and bills and deposits and contracts, which we'll talk about on the next slide. So your digital document storage is important, because don't just file things within your email or keep a box of paperwork. Whenever you get any document for the formation of your company, like your EIN assignment or anything that is government entity sends you, your Texas web file tax payment number is very important. Don't lose that. They only send it once, typically once per year. So you want to scan that and put it in a place in the digital document storage. And a lot of those items, I just have clients put straight into the corporate folder. If I need to move it into accounting or copy a version of it and put it into one of the accounting folders, I will. But for now, if you just get everything that's business formation and getting set up related into a corporate folder, that will be a huge start for you. And then collecting the contractor W-9s. You may or may not know that contractors need a tax form called a 1099 sent to them every January. By the end of January is the deadline. And the information you need to file and to send the 1099s is on another government form called a W-9. And that will collect from your vendor their name, their business entity name, or their personal name they pay taxes with, and the address for them, and then their tax number. Some small contractors, it's their social security number. It could be a business contractor, and they will have their company identification number on there. And then also there's a box where companies can check whether they're a C Corp or S Corp or LLC. And if you don't know what a company is, get that W-9 no matter what. C Corps don't need the 1099 that have to be sent out in January, but it's hard to tell sometimes with companies. You can look at their website and you can't tell if they're a C Corp or an LLC or a partnership. So I go ahead and collect a W-9 from everybody. The easiest time to do that is before you send them the first payment, because they'll be very motivated to do that form for you to get paid. If you pay a contractor for a whole year and then try to ask for the W-9 in the crunch time of January to meet the deadline, it can be a real hassle, and they're not as motivated to do that for you if they've already been paid for the work. So collect those as you go. There's a fillable W-9 that you can download from the internet and pass that on to contractors. Next slide is your formation. So investor checks or wires, even if it's friends and family money that you're collecting, scan, make copies and scan it and get it all into that digital document storage. You want a record of everything. And if you don't have a scanner, which many of us don't, there are some free apps for scanning that are great. And so you just use your smartphone and you take a photo and it will true it up or straighten it up for you. And then you can email it into yourself or email it into the accounting email address and then get it in your digital document storage or save it directly on your phone. So everything investor related. And then cap table is really important. If you are a startup that's going to raise funding, keep great records for your cap table information, proactively manage it. Don't let that slip. That can be really messy quickly. And you're dealing with investor money and they want to make sure that you are taking care of that. There's a few apps or programs out. Carta comes to mind. I know there's some other ones for managing your cap table, and that can be a bit of an investment of money, you know, when you're on tight startup setup budget, but it is worth it because the cap table can get tricky. Find out as much as you can about how to proactively manage that and do it. And record keeping for due diligence, Google that, go to Y Combinator. That's a great location online to go to find out what do investors ask for when they're doing due diligence for investment down the road. And you may be a year farther from getting an investor that wants to do due diligence, but if you know what they're going to ask for a couple years down the road, you'll know what to save and keep records of in that digital document storage. And it will save you a lot of stress when you start having those investor conversations. Signed agreements means any signed agreement. If you are hiring contractors, if you're doing contract work within as part of what your company is doing, you want a copy of signed agreements and in your digital document storage. And so I would have within the accounting a vendor folder or contracts folder and just save everything, scan it in and save it there. And then again, any document you receive from a government entity, save it all. These are some apps. Shifting now to what software works really great. Within our practice that we enjoy. If new companies come to me, I set them up on Xero. There are other accounting software packages out there. Xero's not #1 in the US, but they are in most other countries. Xero is my favorite. So if I have founders with a new entity, I will put them on Xero if they're not on something else. Sometimes we will convert as well because Xero can be a great solution compared to other ones. And then the other add-ons that I'll add next, most frequently, Gusto is a payroll provider that is very tech forward, very tech friendly, responsive. They are wonderful. If you've ever dealt with payroll providers, Gusto is not like the typical one. And even as a founder, like you could just pay yourself through a payroll on Gusto. They're very startup friendly. And some of my founders choose to do that because they don't want to deal with the taxes at the end of the year, but they just want taxes taken out all year long. And then another side benefit of Gusto is once you're set up on there, you can pay contractors as well through Gusto. And you can set up your payroll to be auto run. So it'd be really easy for you to get that set up and plugged in, and it will sync with Xero and make it just easy, seamless. Gusto also does all the tax filing, unemployment tax, and all that stuff. Makes your life so much easier. And then the next add-on that I probably would do for most companies that want to do invoicing through Xero and not their custom platform is I would add the Go Cardless. And that's what that does. You add Stripe as well to take payments, and then Go Cardless will do recurring or ACH type of invoicing. And I'll show you a few slides down what your invoicing will look like with Go Cardless. And Bill.com is a tech-forward solution for paying bills online. It's wonderful. It makes bill pay so easy. You may be able to pay bills using your bank. And that can be a good solution if you only have a handful in a month. But as soon as you grow beyond that, or you have multiple employees that need to do approvals, that's another reason you would go to Bill.com sooner rather than later. They make that flow very easy. So bills can be sent straight into Bill.com. You have the image of it saved right there. You code it, it matches with your Xero accounting, and there can be approval workflow set in there or not, either way. And so that is a great program that I enjoy using with a majority of my clients. And then the last one on this screen is Harvest. If you are an independent professional or if your company needs to do time tracking for projects, Harvest is a good solution for that one. It's kind of a niche. Not a lot of my clients use it, but just know that if there's time tracking for projects, that is one for you to look into. This is a view of what Xero looks like on your computer and on your phone. This is the dashboard that you would come into. You can see the different sections. I tend to have the bank account. This one does have the bank account, but typically it'll show up with more specifics in it for you. And then invoices, you get a quick look at your invoices that are out and outstanding, and do you have any drafts in the works that need to be finished up. And then bills to pay is down at the bottom, and that we'll talk a little bit about that later down a slide or two, the bill pay piece. So that's what the dashboard looks like. You can also see it on your phone, easy. I don't have a slide on it, but Xero also offers expense reporting expenses where you're with your phone, and if you do meals and entertainment spend, or if you're doing driving for business and you need to try to put in a receipt for the gas that you spent, you can use your phone and take a photo of the receipt, and it goes straight into Xero if you have a subscription that has that expense reporting. And that makes it so easy. You don't have to keep track of receipts. It's awesome. Here's an example of invoicing. You're most likely not building a nonprofit if you're here with Capital Factory. And so invoicing is important to you. I just wanted to give you a quick peek at how invoicing looks when you're invoicing through Xero. I know some of you probably have a tech custom built platform that you'll invoice out of, and that's fine. I have clients that do that as well, but about half of them do invoice out of Xero. And you can see on the bottom left that we have a Pay Now button, and that is because Stripe is connected to this company. And then also under the due date, it says the information for connecting the Go Cardless, so that you don't have to pay each invoice manually, but it'll take a payment automatically to make it simple for your customers. So it's a powerful invoicing tool that they have within Xero. Works really great. This is invoices that you are waiting to be paid. I just wanted you to get a quick look at how easy it is to see, okay, City Limousines has 4 outstanding invoices, and you can see 3 of them are overdue. They turn red in there, and it gives you an overdue amount, and then there's a current invoice amount. The dates are off here because it's from the demo company, but it just gives you a quick view. So if you're and then you'll be able to create a report as well on accounts receivable aging is what it's called. But if you had a question, I need to look up this contact. If the invoicing comes out of Xero, it's a great way to keep track of who owes you what. This is a view of the chart of accounts as it comes in default. So when you first open your Xero, and other accounting packages will do this as well, they'll give you a default chart of accounts to use. For my clients, we customize it right away. We don't work with the default. You can, and it will take you a certain amount of business, but probably, especially if you're a software company, a tech company, but really I find with all my clients, I customize the chart of accounts. So this is really just a heads up slide. One of the reasons you might want to outsource your bookkeeping sooner rather than later is so that your financials are actually helpful for you. And the key to getting helpful financial reports is to create a custom chart of accounts. And so we do that really well for our clients. So that's a peek of the default in Xero.
Before we go on, it looks like we actually have a question. What would you say is the main difference between Xero and QuickBooks?
Sure, let me back up to that. That's a great question, and I get that one often because QuickBooks is so well known in the United States. When I am talking to new founders and I tell them I'd really like to put you on Xero, they've never heard of it. They try to spell it with a Z, and so I have to answer, well, here's my reasons why, and then I let them make the choice, of course. We do have some clients that are on QuickBooks online, only online. We don't have any desktop clients. If you are setting up QuickBooks, I recommend you use QBO, not the desktop version. But my reason, one is the people that work for Xero, and Lauren and Angela are two of them. Brad and Bjorn and Chris are local here for me. They help us. If we get stuck or we have a question, every client is different, every company is different, so there'll be unique situations that pop up. If you have questions for QuickBooks Online, it just can often go into the void, or they will respond to you and you can tell they're probably not in our country and they don't really understand what your question is regarding your specific company. So as an accounting practice, I choose Xero for the support because it doesn't ever slow us down when we have questions. I think the price point is better for small companies. I think Xero is a better price for what you get, the value that you get for it. And so I really like that for my clients in my practice. There's just features that Xero has that QBO does not, I find frustrating. So there's my reasons. QuickBooks Online will do you just fine. They are #1 in the US only because Xero's newer here. I think down the road, you'll see that change perhaps, but that's what came to mind. Lauren, do you have any other thoughts that I didn't mention?
No, I think you've hit some of the big points. Yeah, and I would say, if you have questions on a Xero demo or learning more about the product, I'll include a link to the Xero sign up page in our chat so you can learn more.
Mm-hmm. Yep. It's just more friendly to use. Less frustrating. That's always good. Okay. Let me go back. Reports for managing your company. New founders often are confused, even intimidated by financial reports. But if you can set up your accounting system, your software well, and your chart of accounts well, and reading reports will help you, will give you peace of mind rather than stress you out. So I'm just going to do a quick overview of these reports just in case you aren't familiar with them. So your income statement is going to tell you your income coming in and your expenses going out, and it will be listed by the categories in your chart of accounts. Some people call it a profit and loss statement or a P&L. That's why I have that in parentheses. I tend to use the phrase income statement. And so that one is, it can it looks at a period of time, and you set the period of time. So you can look at the income and expenses in a month and compare it to previous months, or you could look at it quarterly. Some of my business owners only want to see quarterly financials, and so the income statement would be Q4 compared to 3 and 2 and 1, or this Q4 compared to the previous year's Q4. And that gives you a snapshot of your company and the direction you're heading. It also helps you monitor your expenses really well. So that's what you use your income statement for. And then of course the bottom line profitability you want to see. The balance sheet is different. It is a snapshot spreadsheet. So it's not a period of time. It is, what does my company look like today? And so you would put a date. If it's month end close, you put the last day of the month for the month close. So we just closed up November, so we sent a lot of balance sheets from month end close to our clients. And on that, you can see your assets and your liabilities and your equity. And so assets is money in the bank. It is property that your company owns, like computer equipment, or vehicles. If you have a company that uses a vehicle for business, it will have liabilities, which means money that you owe, bills that you owe payment for. Also longer term, like loans, PPP loan would show up in this liability section on your balance sheet if you happen to have that. And then the equity section, which is the business owner or the cap table equity section. So the balance sheet shows you that, not the income statement. And then important other reports are accounts receivable aging. So that's a fancy way of saying who owes me money. Those outstanding invoices, which we looked at a few slides back, will be listed on the accounts receivable aging. So it gives you a snapshot on one report of who owes you money and how far behind they are, whether it's just 1 month or more than 90 days. And it helps you know, who do I need to follow up with? And then accounts payable aging is the same type of report for bills that you owe. And so it will list your vendors or the people that you owe money to, and a kind of breakdown of when that bill was due. Am I past the due date for that bill? And then it can help you prioritize if you're in a cash flow crunch. That report can be really helpful in deciding, who you're going to pay next and when. Hopefully you won't be in that, but sometimes it happens. And the accounts payable report is very helpful. And then cash flow reporting, we provide that for some of our clients so that they can see, it's kind of a one place for anticipating accounts receivable coming in or income. Could be the Go Cardless ACH payments. We know what comes in for the most part every month. So we have that at the top of it. And then we have bills and accounts payable that's outgoing in the next 2 weeks or in the next 4 weeks. So you can also do cash flow reporting that goes up to 12 weeks, can still be helpful. Most of my clients want to see 2 to 4 weeks of cash flow so they can plan bills to pay and when to do the timing of that. So that can be really helpful. I am to the end. This is me, Dory Eversman, Chastain Partners. I'll leave this up for a bit if you want to jot down that info. I love helping new founders get set up well. And I do complimentary phone calls and screen share to help you get your Xero set up in particular. Usually that takes about 30 minutes, and I'd be happy to do that for you. The hope is that down the road, you'll come to us, but maybe not. Whatever bookkeeping group you go to, we'll be very thankful that you've been set up well at the beginning. And so it's kind of my offering to the world. When do you want to look for outsourced bookkeeping? There's a few triggers, if you will, for that. One is you're just done with doing it. Like, it's become a dread in your life to keep your accounting up to date. And if you're someone that doesn't enjoy going in and keeping the books up to date, when you get to your first tax season where you have to produce financials for a tax CPA, that may be your pain point and your trigger where you say, okay, I'm not going to let this become behind like it did this last year. I want to make sure everything is maintained so that when it's time to go to my tax CPA, it's easy. We don't do taxes in Chastain Partners. I work with tax partners. I have a favorite one that's here in Austin, but we work with anybody that founders want to bring in for doing their taxes. And some other points are, if you're the invoicing, you're starting to miss sending out invoices, or you're starting to miss bill pay, and you just feel like the hassle of it is not worth it for you. It's adding stress. And really, you're probably not starting your company to do accounting. Yes, you can do it. It isn't brain surgery. But is that why you're creating a company? And being a founder is hard enough. As much of these small tasks that you can delegate, the sooner, then you're not going to be the limiting factor on your company's growth. And so those are the ones that came to mind for why you want to outsource your accounting. All right, 10-minute reminder. So what questions do you have? I'm going to go back to the beginning slide here. While you think of questions, I'll go back one more. This one. Did anything else pop up, Lauren, that you saw while you were watching?
That was the only one for now. I guess while we have some time, I was just wondering, maybe, Dory, if you have any advice on if someone's looking to start a business now during the pandemic, any sort of, feedback on how to go about doing this, or what people should be keeping in mind?
That's a great question. I am not an expert in entity selection or setup, but I have come alongside people as they've done that. LegalZoom is a great solution to quickly set up your LLC. Even if you're planning on getting funding down the road, you don't need to be a C Corp, a Delaware C Corp right away. You can hold off on that and transition up to it when an investor asks you to do that. I recommend, and get other people's opinion, but what I've seen people more often do, and what I recommend if you're starting out, is set up an LLC in Texas first. You can always upgrade. It is much harder to come back. In fact, I'm not even sure you can come back from a Delaware C Corp in all situations if you decide that that's a little too big for where you end up wanting to go. And that would be my first place to go to set up your LLC, and then go to your banker would be the next step. I see another question pop up. How hard is it to go back in time to clean up the books, say 2018 to 2019? Hard, hassle, I guess. And these clients do come to me where, in fact, I have a cleanup client right now. They came for maintenance earlier in the year, but now we're cleaning up 2019. He just had us hold off on that and wanted to get up and running on the current year first. It isn't terribly hard, but it is not as enjoyable. It is way more enjoyable to set up a company well and maintain well than it is to go back. Part of it is the record keeping. The IRS wants copies of things over $75. And if I'm trying to clean up from 2018 and I have to ask the founder, hey, what was this money spent on? That can be really hard and time consuming, and a lot of back and forth on cleanup work. So that's another reason why sooner rather than later is better for getting bookkeeping going, outsourced bookkeeping. Not impossible, of course, and we do it, and other accounting groups do it, and you can get that taken care of. It's good to close. If you have that negative of unclean books or unfiled tax returns from 2018 and 2019, do yourself a favor and deal with it today. Don't carry that negative. It's going to just drag you down with anxiety. It's going to cost you a bit of money to do, depending on the transaction volume, to get that cleaned up, and late fees in your IRS filings, but do it. Do it. Don't let that negative hang out. Andrew's question, thank you, Scott. Andrew says, does Xero do any financial projections for a business plan for lending investors? Financial projections for a business plan for investors. So financial projections, Xero and QBO and accounting software looks backwards. That's what it does. It's record keeping for what happened. Financial projections or forecast models is not what Xero is designed for. I think they do have in the works a bit of a forecast offering, but probably what you want to do for a forecast model is contact a fractional CFO here. If you're in Austin, Andrew, I'm not sure if you are, it doesn't say on here. But if you're in Austin, I have some great referrals for fractional CFOs that just bill by the hour for creating a forecast model, and that's what you'll need. They will pull from your financials, your historicals out of Xero or your accounting software and use that as they get to know you and your company to build that forecast model. Oh, Dallas. Okay. Andrew, I probably, if you reach out to me, I'll have some referrals for you up there. Brenna, you came to Austin. What resources locally would you recommend for startups? Well, Capital Factory is fantastic. You're at the right starting point. Other startup resources, I tell you, there is Capital Factory's got great list. I would start there. And then the next startup resource would be Paul O'Brien's material. His website is called SEO Brian or Paul O'Brien. You could Google him, Austin. He has a resource list for startup founders in the Austin area and I think Texas wide. And it is very extensive. So that's who I recommend you look at online. Recommended bigger banks, but smaller local banks and credit unions offer us small business better relationships. So it's hard to go to the big national banks. I agree. You are right. Yes, that is so true. So then you have to decide, you know, what you're going to do there. Like, it may be more important for you to do that small banking relationship with a small bank now, and you can always move to a larger bank when you're ready. So that's a personal choice. I would ask the questions, does your bank portal sync to the accounting software? That's I don't take clients anymore if their banks do not sync with the software. Let's see, tax laws here in regards to how much a business needs to make in order to file. I am not a tax CPA, so I can't answer that question. My favorite tax resource here in Austin is Ashley and Associates and my colleague and friend Jacqueline there. But there's a lot of great tax folks in Austin area. I enjoy a lot of them. So take that tax question to them. And then Lauren put my contact info up. Any other questions? Or Lauren, anything else you think I might be able to speak on?
One last question. I think it's just, can you spell?
Oh, was that for Ashley and Associates? It's a tricky word. ATCHLEY. And I can put it in the chat. I could do chat too. Associates. And then Jacqueline Roberts is my favorite person to work with. If clients come to me and they don't have a tax CPA, about half of my clients work with Jacqueline now. And what you want to look for in a tax CPA is one that doesn't work last minute, which is really hard to know because probably if you ask them, they will tell you, no, we don't work last minute. But there are so many tax groups that do things last minute and that create, for the bookkeeping group anyway, create a lot of last minute flurry. Jacqueline's team at Ashley, they front load their work. They don't do anything last minute. They have a team approach, which is another thing that's helpful in the tax CPA is it's not just a one-shot person. That can be great. I know some great people that do that, but as your company gets bigger, you may need more of a team support, which is part of why Chastain Partners has teams as well. You can hire a single bookkeeper support, and sometimes you can save money that way, but that term, you can get ghosted in that way as well. Someone's sick in their family, they decide to go on a long vacation. A team approach to bookkeeping can make a difference in your stress level down the road if there's something that you need in your accounting process.